During his first speech to Congress last year, Donald Trump made some big promises on tax cuts.
I'm calling for no tax on tips, no tax on overtime, and no tax on Social Security benefits for our great seniors.
But don't be fooled, there's actually a lot less here than meets the eye. If enacted, these tax cuts actually won't help that many people. They'll have unintended consequences, and they'll blow a massive hole in the federal budget, which will ultimately hurt all of us. Let me explain to you exactly why. So first, let's talk about Trump's proposal for no tax on tips.
No tax on tips.
Here's why this is a bad idea. Number one, not that many people are going to benefit. Only about 4 million workers, or about 2.5% of the workforce, are in tipped jobs. Of course, there are exceptions in places like Las Vegas, where more than 5% of the workforce works for tips, but the vast majority of us do not work for tips. Second, 37% of tipped workers already don't pay income tax. If you do the math, it means that only 2.5 million workers nationwide will benefit from this idea, for now. Here's a bigger problem. No tax on tips will distort the labor market so that more people are working for tips. In other words, it'll encourage tax evasion. Say, for example, that you need to hire a lawyer to look at a contract. Maybe they decide that half of their fees should now be structured as a, quote, tip for a good service. Or you go to the mechanic to get your car fixed. Now, all of a sudden, there's a tip built into your repair bill. If you don't like tip screens now, you'll be seeing a lot more of them if Trump's proposal passes. Another consequence of all this tipping is that it allows employers to cut wages. As it is, the current federal minimum wage for tipped employees is only $2.13 an hour. No tax on tips will mean lower wages for workers, which means more dependence on tips, which means, again, more tip screens. A final reason that no tax on tips is a bad idea is so-called horizontal equity. That's the idea that people who are similarly situated should be treated the same. It's unfair to single out a particular group of workers for special treatment. Here's an example. Waiters and waitresses earn an average of $36,530 in 2023. People working in retail sales made almost the exact same amount of money, $36,690. Yet under Trump's plan, only the waiters and waitresses get the tax break. Is that fair? Of course the answer is no. Some of the same problems plague Trump's plan for no tax on overtime.
No tax on overtime.
Again, first, this idea would not help that many people. According to the Yale Budget Lab, only about 8% of workers take overtime on a regular basis. But again, that's for now. If there's no tax on overtime, then more people are going to want overtime pay, which means more costs for employers. That in turn could mean higher prices for consumers and potentially fewer jobs. No tax on overtime is also expensive. The Tax Foundation estimates that it would cost at least $680.4 billion in lost tax revenue over the next 10 years, and as much as $1.5 trillion if overtime is exempted from payroll taxes too. Finally, let's turn to Trump's plan for no taxes on Social Security.
No tax on Social Security benefits for our great seniors.
Yes, I know I'm a broken record, but this too will not help that many people either. For one thing, half of Social Security beneficiaries already pay no income taxes on their benefits because their incomes are too low. That's according to the Center on Budget and Policy Priorities. So this means the people who most need the help won't get it from this particular plan. The people who will benefit, however, are the top 20% of seniors. If you're a senior with an income of more than $205,800, the top 20%, Trump's no tax on benefits plan will net you about $7,250 according to the Tax Policy Center. Seniors in the poorest 20%, on the other hand, would only get about $250. But there's a bigger problem. Taxing rich people on their benefits is what helps keep Social Security and Medicare solvent. In 2025 alone, taxes on benefits will provide $101 billion to the Social Security and Medicare trust funds. As a consequence, no taxes on Social Security, according to the University of Pennsylvania's Wharton School, will cost the government about $1.5 trillion in lost revenue over 10 years, and it will add 7% to the national debt. It would also speed up the bankruptcy of Social Security by 2 years from 2034 to 2032. If the real intent of these ideas is to help low-income families, a better idea is to raise the minimum wage, or even better yet, to increase the earned income tax credit for working poor families. And instead of giving rich people a tax cut on their benefits, the better idea would be to increase their taxes so that Social Security and Medicare are solvent in the long run. Given the combined price tag, it's actually unlikely that Trump will be able to keep his promises of no taxes on tips, overtime, or Social Security. As it is, Republicans are struggling to pay for an extension of Trump's tax cuts from 2017, which the University of Pennsylvania estimates will cost at least $4.5 trillion over the next 10 years. And extending those tax cuts, by the way, will also benefit billionaires, not ordinary Americans. But then again, helping out his rich buddies might be the only promise that Trump was planning to keep. I'm Ann Kim, and thanks for watching. Don't forget to like, share, and subscribe.